Okay, so let me talk about what I was going through in terms of my personal strategy. So a lot of you may know, some of you may not know, that I am a breakout trader, primarily probably a breakout trader. Okay, and I only take the breakouts on the 4-hour or daily chart. Okay, 4-hour and daily. I take the breakout retest on the 30-minute and the 1-hour. Okay, I also take the breakout retest on the 4-hour and daily, but it's a lot more rare. It doesn't happen that often. So for me, right, this is a setup in pound Aussie. Okay, so with my normal trade management, right, I've got here a very nice setup. We've got a cup with handle, head and shoulders within that cup with handle. We've got our 200, we've got our 20 period close by price action. We've got a nice accumulation prior to that break, and we had a good reaction. Okay, so my initial thoughts, and this is my initial trade management system on the 4-hour chart, is I put my stop above this recent anchor on the 4-hour. Okay, but there's been a few times, and this is probably not the best example because this was a really nice move. But there's a lot of times where I hit possibly my TP1, which is 1-to-1 risk reward, right? And often it comes back. So I had a Euro CAD trade last week. So a Euro CAD breakout on this 4-hour chart, right? Just here from this area, if I zoom in here, so you can see what I'm doing, right? I'm doing the same thing every single time. You can see the similarities in every single setup I'm about to show you, which is what guys should be doing. You should be doing the same thing every single day. Does it fit your strategy? Good trading is boring trading. It's actually a boring industry. I mean, I love it, but it is boring at times. So good trading should be boring trading. And, I put my stop here. Breakout was here. I took TP1 here. And then I managed to get my stop to break even on my second trade and got out for just a 1% gain. So this happens a lot, right? This happens a lot. Okay, the great trades where my edges come from, they don't often come around a lot. So in my personal mind, I'm like, Ryan, okay, I've been trading. I'm profitable, right? I'm very confident. Yeah, no worries, Abed. No worries, Abed. I'm confident in my system. I'm confident I'm in the 5%, right? But how do I get a little bit better? And for me, nothing in terms of my strategy has to change, right? I.e., the price action that I look for prior to a break. But what can change and what potentially can change is my risk reward, right? So where I place my stop loss. And even though I think it's important to give the trade room to breathe, within our 4-hour breakouts, I'm usually looking at about 100 pips, 100, maybe, 100 to 150 pips. So it's quite large. And what I was thinking last week, I actually got up at 5:30 in the morning for some reason. And I was just thinking about things because I had a few trades that hit 1% and didn't really go. And, I was just thinking, okay, there must be a way that I think I can improve this. So I was testing a few things. And I personally really like the 30-minute charts. It's one of my favorite charts. And I do a lot of work with anchors, i.e. trend anchors. So what my personal thoughts was go from the 4-hour chart and say, Ryan, when I see a setup, i.e. like this, okay, I'm going to move down. When I decide that the 4-hour breakout is on, right, I'm going to move down to the 30-minute chart and see where my latest anchor is, okay? So this is the setup here. If I zoom out, okay, from a 30-minute perspective, we can see our accumulation and a nice price action leading into this break here. So what I'm doing, again, this is my thought process, is trying to find our latest anchor on the 4-hour chart to get that risk reward a little bit better and increase our payoff. But one of the biggest things that I don't want to do, right, is significantly reduce my win rate. Okay, so this is where trading strategies come. It's very simple premise. You can break it down very easily. What's your win rate and what's your payoff ratio? Okay, normally, if you've got a higher win rate, you've got a lower payoff ratio. If you've got a lower win rate, if you've got a profitable strategy, you've got a higher payoff ratio, right? So people that win 30% probably make 4 or 5R on a winning trade. Very simple. But as I go down, I'm seeing anchors here and I'm seeing anchors here prior to when I got triggered in. So and I've done my kind of research on a few trades here, and I'll bring that up here. I actually wrote them down so I can show you the kind of big differences that they have. So on this pound Aussie, this original stop was 130 pips, okay? But with my new trade management system, or my potential, because I need data, right? I still need 20 or 30 trades of data before I put this in, because even though I think it works, I don't know whether it actually works. I need that data. it actually turned into, with a new trade management system, of a stop of 50 pips. So I think it was 50 pips here. Again, this is going by my writing. So you can see the big difference that we have. And what I need to find out, and again, I'm just hoping this helps you guys think about it, is that I normally take my profits or half off at 1-to-1, right? I take 50% of my trade. So if I've got one lot, I place 2 trades at 0.5 lots, and I take 0.5 lots off at 1-to-1 risk reward. So if I'm risking $1,000, I basically take $500 off, so that if it does come down and hit my stop loss, I lose nothing, right? I make nothing, I lose nothing. So if you've got an entry in here, in the latest 30-minute anchor, right, where am I putting my first TP? Because I always believe in taking profits, but I could increase this to a little bit more, maybe 1.5R, maybe 2R, as long as the data suggests that. But as we move out, and if I had that trade there, right, we look at the power and the potential increase in percentage returns of going from this risk reward, right, to this risk reward. Whereas I'm managing it same. So I'm looking for the 4-hour swings, right? And in this particular instance on pound Aussie, where I had an original, I think it was a 6.4% trade, right? With a new trade management, it would have been a 16% trade. Okay, so you can see the big difference in that. And also the important thing that I've noticed is that it didn't come back and hit my stop loss, right? So from the 30-minute here, where's it gone? Where's it gone? Sorry, guys. Here. So from the 30-minute here, right, in my stop loss, say hypothetically it was here, it did not come out and take me out, right? So that's so key, and this is what I want to find out. I'll give you another example. Okay, let's look at pound New Zealand. Okay, no worries, mate. Hopefully it's helping some of you guys. Again, I'm just going through my thought process and what I thought this week. So pound New Zealand, a very similar setup as my trades always are, right? Break in ABC or certainly a bit of accumulation prior to a break of significant zone, right? Notice here we're in a good position to break. We're crossing underneath that 200, and we're roughly around that 20 period moving averages, which I use as a visual guide to get me into trades at the right time. I.e., we don't want to be buying stuff, we don't be buying stuff up here. We don't be selling stuff down here. Using that 20 period simple or whatever kind of 21 EMA just gets you into trades at the right time. So again, we look at this example where the risk reward there is relatively high, right? On this particular trade on pound New Zealand, it was 111 pips. But what I then do is I move down to my 30-minute and I do the same thing. I look for our new anchor, right? So for here, stop loss that was there, what I'm looking at is if I'm watching this trade and I've decided to take a break on the 4-hour at this area, right? I have to watch price action a little bit more than on the 4-hour chart, because on the 4-hour it's kind of a set and forget. But I'm going to have to watch how things set up as I go along. So in this particular instance, and let me run you through how it will work, is that I've decided to take a 4-hour break, okay? So I put my 4-hour order in. Because remember, hindsight is an easy thing, right? Hindsight's so easy. You can say, oh, look, this would have happened, this would have happened. But you've got to think about the realities of what is happening with price and what are you thinking, because we don't know what's happening in this period of time, right? So watching this, and as we get to this particular bar, right, and we've broken through the lows, this for me is a valid anchor. So I go from here and I say, okay, I'm going to take this one out and I'm going to put another trade in here for, I think it was 67 pips on this example. All right, so we've gone from 111 to 67. And as we move and as we break, the most important factor here is we didn't come up and we didn't take us out. So we go from 111 down to 67, and we have the same reaction on that break, where obviously the risk reward from there to there becomes a lot more than from there to there. So in this particular example, I think I would have got 9% or roughly around that on my normal trade management, and on my new trade management, possibly getting somewhere around 14. So it's something that's quite exciting. I can show you another few examples, but maybe I won't do that right now. But that's personally what I'm thinking, and using my knowledge, I need to get at least 20 or 30 trades of data on that before I change my trade management system. So trade management is so important. And it's things where you know, when I used to test, and I always believe, even as a kind of profitable trader or somebody who's been doing it for a while, going back and testing, you know, I did my last test like 2 years ago, so it was probably a long time. And what I didn't account for, and what you don't possibly account for, is the fact that you're a better trader 2 years later, right? Maybe you're picking better trades because you've got more experience in the markets. So that's when I thought, right, do you know what, Ryan, I'm going to go back in. And I also was testing another particular strategy, and I call the aggressive breakout strategy. So it's kind of got me in that mood of, okay, do you know what? I'm going to try and go up another level here in my personal trading. And that's what I'm thinking.
Interested in seeing our trades live as they happen? By joining the A1 Trading Discord, you'll get a notification every time one of our traders enters a position. Each trade we share comes with an entry price, a stop loss, and most importantly, a full breakdown of why the trade was taken. Learn alongside our experienced traders, join our active chat room, and ask your questions in our coaching webinars. Between our team of active traders, we trade Forex pairs, commodities like gold and oil, crypto, and stocks. By joining the group, you'll be able to keep up with all of it. Sign up today using the link in the description, and don't forget to use our promo code listed below for a special subscriber discount. Thanks for watching, and see you inside.